All right, good evening, folks. Thanks for joining us here tonight for what will be the third installment of the Great Depression Lecture Series. It's been fantastic so far, so thanks to those of you who've come back to join us. And I see a lot of new faces too, so thanks and welcome to those who are joining us. So just to give you a brief synopsis, right, many of you know the spiel, but we're going over the Great Depression from its beginnings. The first 2 months we talked about the 1920s. And now we'll get into the meat and potatoes. We'll talk tonight about a little bit about Hoover, his presidency, the stock market crash in the early kind of years of the Great Depression. So next slide. All right. So Hoover takes over from Calvin Coolidge in 1929, March 4th. And as he does, right, it's the last of that kind of Republican ascendancy, those 12 years where the Republicans are going to control Congress and the White House. And so he's building off of what is that perceived roaring 20s that we talked about last month, right? The roaring, quote unquote, right? The kind of bolstered economy of Calvin Coolidge in the cities, gross domestic product and everything is going up. And so when Hoover takes over, he's kind of building on that philosophy, right? But he's going to change it a little bit. He believes in that kind of rugged individualism, right? He believes in self-reliance of American people through hard work, right? That is what is going to propel the nation forward. He does not believe in government intervention or the use of government welfare through the federal government. But he also understands that there are some issues, especially in the countryside. He understands that farmers are kind of strapped with a bad economic situation, rising debts and bankruptcies. And so he comes up with this fantastic idea of volunteerism, where he's essentially going to ask the businesses and the business owners and the corporations to willingly, out of their own pocketbook, make sure that wages are maintained and that unemployment is kept to a low. He believed many of these things because he saw the government's role, its main kind of obligation to the American people, as fostering cooperation, that it wasn't supposed to be a heavy hand, but instead kind of an overseer or a judge to make sure that things were moving equitably throughout the country. He also believed that government intervention, right, why he was opposed to it, is because he thought that it would kind of undermine the American character of that individualism that has driven us through the last couple hundred years, right? That it would undermine that American character, that it would foster dependency among American people if the federal government is giving them kind of subsidization. And he believed that really federal aid from the federal government challenged the constitutional order. And so when he takes office on March 4th of 1929, he gives what will become, kind of known as this ironic inaugural address, where he states in his concluding thoughts, and I quote, "In no other nation are the fruits of accomplishment more secure. In no other nation are the institutions of progress more advanced." And he says to the American people, "I have no fears in the future of our country. It is bright with hope." Next slide. Of course, in October of that year, those hopes would be diminished pretty quickly, right? And on the back of kind of rampant stock market speculation, limited regulation from the federal government, the bubble is going to burst on Wall Street in New York City. So in September, just months after Hoover gives his inaugural address, promising the nation that bright times are on the future, the Dow Jones Industrial Average reaches its peak at 381 points, right? At this time, though, people are seeing the warning signs. There's an economist based out of the United States who warns that he knows that a crash is coming and that it'll be terrific. Right? The stock market is based on this speculation of investors and brokers alike that the stock market can never go down. It will infinitely rise forever. Not a good kind of philosophy to have with things that are so volatile. And so there's going to be a few reasons for this decline, right? Throughout October, we're going to see a total decline in market value on October 23rd, right before the stock market closes into the weekend. It opens, or it continues to be, on Black Thursday before the markets close. 12 million shares are going to be traded. There's going to be an 11% decline in total market value. As the markets close and they head over the weekend, panic is going to be instilled in brokers and investors alike. It opens on Black Monday, October 28th, with a 12% decline in total market value. And to what many people will remember, Black Tuesday, one of the worst events in American economic history, 16 million shares are going to be traded. There's going to be $14 billion lost in a single day, and 11% decline in total market value. By the end of this crash, right, it's really a 3-day, 4-day event, but culminates all of October. $16 million, or billion, excuse me, is going to be wiped from the New York Stock Exchange, which is equivalent to date of $295 billion in a single month. So why does the stock market crash? Why is this important? Well, there's a few things. It kind of builds upon what we've talked about. Buying on credit, speculation. The first is that investors were buying on margin. Investors in the New York Stock Exchange were borrowing money to buy stocks. They had to pay a very limited down payment. The returns on this indefinite growth of the stock market would return in your favor. You could pay back the debts. Well, when the stock market goes belly up, all these investors can no longer pay their debts. It leads to widespread failure or kind of bankruptcy in the loss of kind of money there, right? Federal Reserve policies as well. There is nothing in place of the federal government or the Federal Reserve to stop speculation. Most stocks are far exceeding their actual value. They're inflated prices, right? The corporations that are being traded on the New York Stock Exchange are not worth the individual shares that they represent to traders. They do nothing, the Federal Reserve, to curb that speculation. It slows and constricts the economy, which is going to lead to the Great Depression, right? It's going to culminate in some of those economic downturns that we're going to see. There's also going to be this idea or this panic that kind of goes through investors of the panic selling, culminating in those weak regulations. The stalling of stock prices in early October are going to lead many to fear that this is the decline of the Great Depression or of the stock market. That kind of economic bubble that they said would indefinitely go up has stalled. Oh no, panic sell. There's nothing to stop or help in those protections. Next slide. So when the stock market does crash, right, it's going to be pretty eventful for a multitude of reasons that we'll come to find out. But what is important, and when I talk to both students and adults alike, most people are going to tell you that the stock market crash was the beginning of the Great Depression. That is factually not correct, right? That the stock market crash is a symptom of some of these underlying conditions that we'll talk about next. But that is not to say that the stock market crash wasn't important in its own kind of respect, right? So who was invested, right? When we talk about the stock market, we're usually thinking in our modern conception that it's most Americans. That too is not correct. In 1929, only 10% of households or 2% of individuals were invested in the stock market. Today, millions of us are invested in the stock market. Almost 60% of all Americans today have direct or indirect holdings in the stock market through pensions or 401ks, but this was not the case. So really, those who were affected by the stock market crash are going to be the top 2% of Americans. So for many in the countryside, the stock market crash, what's the difference, right? I'm not invested in the stocks. I've been in an agricultural depression since 1919. What's the difference? But those who are affected, it's going to kind of be the symbolic end of the Roaring Twenties. That what is to come is going to be despair, right? The cornerstone of the American economic project in Wall Street has collapsed. It's ended this consumerism and luxury that we have known through the 1920s. It's also going to have long-reaching, long-term effects. Millions are going to lose savings in the associated bank failures that are going to spread across the country in urban and rural alike. It's going to triple unemployment between 1929 and 1930 from 1.5 million Americans without a job to 4.5 million Americans without a job. And it's going to contract the economy, leading to a 33% reduction in national GDP. Next slide. And as you can see here, a kind of graph of the Dow Jones Industrial Average, you can see how severe this kind of 1920 spike right there at the beginning was. When you're talking about the Dow Jones, you don't want to see it go down. You always want to see it go up, right? But what's very important to note, as I said, right, that the stock market crash is not the cause. If you look at this graph, there's actually a recovery by the beginning of 1930, where the president and the investors and the brokers are saying this was a blip in the system, the stock market is strong, it is recovering, but again, it'll bottom out by 1932. So it's not the cause, but it is going to be, next slide, a signal for these factors that are really driving an international global downturn. And we'll go through these kind of one by one to kind of understand the situation that is affecting not only the United States, but also the world more broadly. The first being the lack of kind of economic diversification in the United States, this income inequality or maldistribution of wealth. Where's the wealth really at in America? The volatile credit structure that's kind of plaguing cities and country alike with debt and consumer purchasing power. The mistakes of the Federal Reserve Board in kind of responding to the crisis. There's going to be a decline in international trade, and of course, an international debt structure that is going to completely collapse by the early 1930s. Next slide. All right, so the first on that list is going to be the kind of non-diversified economy. And what do we mean by this? Well, economic activity in the United States is going to be essentially comprising two main industries, construction and automobile manufacturing. Those two are going to account for the vast majority of corporate wealth. In 1929, 200 corporations out of 400,000 registered in the United States control 49% of all corporate assets and 43% of all corporate income. 200 out of 400,000. In 1929 as well, 1,350 out of 400,000 corporations raked in all 80% of all corporate income. A small fraction of the entire economy is making the most money. Then, there's 300-odd-some thousand other industries that are fighting over that 20% share. The biggest being the Ford Motor Company, right? It's this massive kind of automobile industry based out of Detroit, Michigan, and Dearborn and the surrounding areas. When the economy is going to constrict, they're not going to respond. They're going to keep inflated prices on cars. They're going to keep producing cars that no one is able to buy. They don't respond to kind of the changing economic conditions. They retain those inflated prices. And because of that, and because of the interconnected system or the interconnected nature of the American economy, when the big guys suffer, the small guys who supply them are going to suffer, which then is going to exacerbate or accelerate unemployment in the United States. And so when construction and the automobile industry get hit hard because of all that corporate assets that are lost in the stock market exchange, they're going to lay off people, which are going to have adverse effects on the economy. The people who supply them are going to lay people off, leading to this massive unemployment. Throughout the Great Depression, the unemployment at a minimum is going to be 15%. By 1932, 1933, it's going to be as high as 25%. 1/4 of all Americans are going to be unemployed. Next slide. So again, these factors are not mutually exclusive. They're bouncing off each other. They're interconnected. Not one is the cause of the other, right? They're all interconnected. The next being would be this maldistribution of income in the United States, or this income inequality as we've come to know it today. Between 1929 and 1919 and 1929, the top 1% of earners in the United States, it jumps from 12% of all total income to 19%. The top 5% over that same period earned 33% of all income in the United States. To be a top 5% earner in 1929, 1930 means that you made $5,000 a year or more. There's also going to be on the backs of this, right? If all that income is trapped at the top, between the top 5% of earners, top 1% of earners, there's going to be widespread kind of very close to poverty in the United States, right? They don't label it as such, but it's very close. A 1926 estimate estimated that 60% of Americans will live just above the poverty line, that they were bringing in $2,000 a year to live off of, which in today's equivalent would be $37,000 a year. This could be for families of 2, 3, 4, 5, 6, right, upwards. Another factor to this, hearkening back to that first presentation we did, is just how bad the rural economy is. This is making up for some of this massive decline, right? Farmers don't have money. The rural economy has been stagnated for over a decade now, right? This is contributing to that kind of maldistribution of wealth. Next slide. Coming off the back of the distribution of wealth, if people aren't able to spend money and there's not as much money circulating among the average population, following the stock market crash, you're going to see a widespread failure of banks in the United States. 9,000 banks between 1929 and 1933 are going to fail outright. And of all small rural agricultural banks, half of those are going to fail between 1921 and 1930. And how these banks fail is pretty interesting and something that many of you probably know. It's mostly based off bank runs. And so what is a bank run? It's when panic-driven individuals or investors in a local bank hear through rumors mostly that a bank is going to fail. They rush to the bank and withdraw their money or demand to withdraw their money. What happens then is the bank insolves, right? Its deposits outweigh its assets, that the bank doesn't have the cash on hand to liquidate, or it's tied up in these long-term investments that they can't get individuals' money, and it fails outright. As I mentioned, most of these started with rumors. The best example of this being the Bank of the United States in the Bronx of New York in 1930. Rumors spread that the bank is going to fail. New York City residents run to the bank in the Bronx, and they withdraw $2 million in one day. out of out of the Bank of the United States, right? Luckily, the Bank of the United States in Bronx had enough money on hand to deliver those $2 million in cash, but imagine a rural bank or a small agricultural bank that the city runs up, they don't have the kind of liquid cash on hand. Toledo, many of you may know, right? One of the worst banking crises in the United States. So much so that rumors spread that Toledo banks are going to fail, the Ohio Saving Banks Trust, and another one that I don't remember off the top of my head, and they do fail, right? But it's partly because Timothy Messer-Cruz, he's got a great book on this out of Bowling Green State University, the bankers in Toledo were uniquely corrupt, right? They were very bad. And so when they hear that the bank is going to fail, they move cash out the back door, millions of dollars, and they freeze $160 million in assets and do not allow the people of Toledo to withdraw money out of their banks. This is going to cause Toledo, Ohio to have the most welfare recipients in the country throughout the Great Depression of any city. More welfare recipients in the city of Toledo than the biggest cities in the United States. Yeah, Yeah, some very high like that, right? 70% of Toledoans in the city of Toledo having the kind of bank failures. This graph is a good illustration of those failures. By 1933, 30% of all banks in existence in 1930 completely gone. They've failed entirely. It's going to, the one good thing of all these bank runs and bank failures is that the federal government is going to say, okay, there's got to be some insurance or protection. We'll create the FDIC to make sure that bank runs in the future are not, able to, and that people have insured deposits in the bank. Next slide. So while we're still talking about banks, we'll talk a little bit about the Federal Reserve. Again, I'm not an economist. Most of this stuff, when I took the classes, made my eyes glaze over. But it is important, right, to talk about the banks and the Federal Reserve. The Federal Reserve is a more complicated kind of institution in the United States, right? But the main points that you need to understand about how they exacerbate the Great Depression is that they refuse, when all of these small banks or these cities, banks in places like Toledo or the Bronx are experiencing problems, the federal government is going to refuse to liquid cash inject those banks to save them from failing. The Federal Reserve is going to say, no thanks, that's not our issue, let those banks settle it. It's going to not only cause more panic, right, that the federal government is not going to back up these small banks, but it's going to let the cash supply kind of dwindle over the next couple of years. There's also this obligation that the Federal Reserve kind of had, right, to be the lender of last resort. If a bank's going to go under, the Federal Reserve will step in to save it. The Federal Reserve in 1929, 1930 through 1933 is going to say, no, that's not our job either. That we're going to let banks go under to protect the gold standard, right? Something that hasn't been in place since the 1970s, which essentially says that $1 is backed by actual gold that no longer exists, but that was kind of the leading philosophy. We have to protect the gold standard, and we're going to allow those banks to fail and allow that credit to be diluted to protect that kind of gold economic policy. They're also, in 1931, going to raise interest rates on the back of all of this. Right when America needs an injection of cash the most, the Federal Reserve is going to say no, again, protect the gold standard, raise interest rates up a percentage point or two, and allow those banks to kind of deal with their own issues. Of course, the next kind of big token in the Great Depression, or the factor that exacerbated it, is going to be the Smoot-Hawley Tariff Act. But I always like to show my students this. Maybe you guys would get a better kick out of it. But we'll show this clip next from Ferris Bueller's Day Off that I always use to kind of illuminate this. So if you'll, next slide, please.
In 1930, the Republican-controlled House of Representatives, in an effort to alleviate the effects of the, anyone? The Great Depression, passed the, anyone? The tariff bill, the Hawley-Smoot Tariff Act, which, anyone raised or lowered? Raised tariffs in an effort to collect more revenue for the federal government. Did it work? Anyone? Anyone know the effects? It did not work, and the United States sank deeper into the Great Depression.
Well, I tell you, I got a lot more laughs out of this crowd than some of my students. The last time I showed this at the university, not a single one had seen Ferris Bueller's Day Off. You know? Now, mind you, I wasn't born when the movie came out either, but I had old parents, so. That's a good, it's usually what I do to give a starting point to students, right? To understand the complexity of the Great Depression. Like I said, we've already established that the stock market crash in 1929 was not the beginning. It was this kind of faceted economic policies that led to its collapse. But none were more influential in pushing the United States into the Great Depression than the Hawley-Smoot tariff bill, Smoot-Hawley, excuse me. Passed in 1930 by the Republican-controlled Congress and with the signature of Herbert Hoover, it was intended to protect U.S. business and agriculture against foreign competition. We talked about this the last couple months, right? It covers 20,000 imported goods throughout the United States, and it's going to raise the average tariff price by 40 to 50%. Yeah. Protect business, protect farmers, and shoot ourselves in the foot, right? Again, to give Hoover some credit, right? He doesn't have very many fans in the United States. They were throwing things at the wall and seeing what sticks, right? Well, how can we improve the condition for American industry? How can we improve it for American farmers? We now know, hindsight 2020, that this was probably not the best idea, but again, it was something that they were trying to do. Immediately after the passage of the Tariff Act, foreign imports and exports are going to decline by 66% over the next 3 years. The decline in exports are going to hurt farmers who have been in a crisis since 1921, uniquely in the fact that they no longer have a foreign option to export their grain. Overproduction is going to continue, and the market for agrarian products is going to collapse. Again, all of the countries that are affected by these tariffs aren't going to take it willingly, and they're going to retaliate with their own massive tariffs, including the United Kingdom, Germany, and Canada, the biggest trading partners of the 1930s, which further, kind of accelerates the Great Depression in the United States. And this bill uniquely is going to exacerbate unemployment, both domestically and globally, as we'll talk about towards the end of this lecture. And it's going to see a massive decrease in American GDP, almost 33% by the beginning of the mid-1930s. Next slide. And so the last, kind of point in this economic policy is going to be the most confusing, but one with some of the most, kind of lasting ramifications that will become clear very, very soon. And that is the kind of international debt structure that is set up after the Treaty of Versailles, the one that ends World War I, that is going to kind of create this triangular payment system between the Allied nations, Germany, and the United States. And so to give you some context, after World War I, the Treaty of Versailles lists many bullet points of what Germany must do, one of them being that they must accept or pay war debts to the Allied nations. In the billions of dollars. $33 billion, which is $600 billion today, would be paid by the German government to the Allied nations for their kind of destruction during World War I. At the same time, the United States funded the Allied nation to fight Germany. And so the Allied nations of the United Kingdom, France, and Russia are going to owe the United States payments on those loans. They're going to owe the United States around $10 to $12.5 billion, again today $230 billion in loan payments. In fact, during the 1920s, almost all profit made in European countries is almost immediately gobbled up by debt payments, so they're making no money to the Americans of those payments. And they're going to come to the United States and very nicely ask the United States to cancel the loan payments. The United Kingdom, Germany, and France are going to say, can we stop paying you? And the United States is going to go, yeah, you can stop paying us if you ask the Germans to stop paying you. Of course, the Allies are going to say, absolutely not. And so what the Americans do in 1925 or 24 with the Dawes Act is going to restructure this debt. And essentially, they're going to say that the Germans can pay the debt when they have the money available because their economy is stagnated, it's awful under the Weimar Republic. And so the Allies will only get payments from the Germans when they have the money available, and then you, in turn, will pay us. This is going to allow Germany's economy to kind of flourish after a period of rapid stagnation. But in 1929, the House of Cards is going to fall. Essentially, the Allies were operating under a system when they would get a German payment, they would use that money to pay the United States, who would then allow the Germans to make those payments as well. If you go to the next slide, this awful triangle system. It's a circular kind of payment structure. And so when the American economy goes belly up in 1929, the Allies no longer, it has adverse effects on the German and Allied economy. All the European nations are not going to be able to meet their payment obligations. No payments are going to go through. The Allied nations are going to be gobbled up in debt, and so is Germany. And so by 1929 into 1930, into 1931, the European economy is worse off than it was right after the end of World War I because of this. Again, the United States thinking, how do we ease the tensions in Europe? How do we improve the economic conditions of Germany? Sounds like a good plan at the end. Again, no one thought that the stock market in 1929 was going to crash. America looks like it's going to be the economic hegemon for indefinitely, right? And when this happens, it causes a boatload of issues that are going to worsen the depression in Europe, but also going to have adverse effects and worsen the depression in the United States because of this international system. Very unknown to most Americans. It's very complicated to understand now, but it is going to accelerate kind of the domestic conditions as well. Next slide. All right, so I've given you the economics lesson for the day. We'll get more into some, more enjoyable or equally as depressing, however you view it, kind of conditions. But that is the economic basis for understanding the Great Depression. And so if I leave you with one thing when you leave here today, is to know that when someone tells you that the stock market crashed in 1929 caused the Great Depression, you go, no, it's actually XYZ, of which you probably will never remember. But what you need to know is that it was really bad for a multitude of reasons. So the interesting point then is how is Herbert Hoover, with all of this in the background over multiple years, going to respond to the Great Depression? We'll talk about it, but one of the lasting legacies of the Hoover administration and lasting questions for historians is why doesn't Hoover do a better job? If you recall back to when we talked about World War I in the very first month, Hoover was in charge of all of this kind of charity work in Europe during World War I. He oversaw kind of the eliminated starvation in places like Belgium, working with multiple countries to bring food in past blockades. He served as a commerce secretary. He was the undersecretary of everything during Calvin Coolidge's administration. And so Herbert Hoover, more than anybody, should be poised to meet the challenges of the Great Depression. Spoiler alert, he doesn't, and he's not going to be remembered very well. But one of the reasons that he doesn't respond, or what historians have kind of theorized, is that he leans into that really heavily, into that philosophy of rugged individualism. He's committed to the idea that Americans, through tough, hard work, are going to be able to lift themselves out of the Depression, and that the federal government should not do anything until it is absolutely necessary. He wants those corporations, the Ford Motor Companies of the world, to volunteer to raise wages, to keep unemployment low, to keep producing. He wants all of these things, right? But he kind of put a hamstring on them by declining leading to the decline of foreign exports, right? Where are they going to send all of these cars? Who's going to buy them? And so this policy on its face is kind of contradictory. How are you going to ask the corporations to do something, give them nothing in return? How are you going to ask Americans to beat insurmountable odds to pull themselves out of the Depression? And instead of using that federal kind of administration to kind of wield relief, he's instead going to focus on state and local governments. He's going to give them money to fight the battles of the Great Depression. He does not want to use public relief from the federal government. He does not want to instill a dependency on foreign welfare, on what he would call handouts, right, from the federal government. He wants to administer that aid through the state and local government. They know their people best. They'll use the funds however they please. And of course, he is going to do some things for the Great Depression. He's going to do a list of kind of federal congressionally signed bills. Again, he's going to sign the Smoot-Hawley Tariff Act, 1930. We already know that didn't work. He's going to expand public works. He's going to fund federal construction projects, most notably what will become known as the Hoover Dam, to kind of stimulate the economy through employment. He's going to sign the RFC, which is going to provide emergency funding to railroads, banks, agricultural production as kind of an emergency injection of cash. He's going to sign an Emergency Relief and Construction Act and allocate $1.5 billion to state and local governments to build things. He's going to sign a Federal Home and Loan and Bank Act, which is going to help fight foreclosures of homes for Americans. And he's going to kind of questionably try to balance the budget doing all of this. We're going to inject money, but we're also going to balance the budget. And so he raises taxes to try to balance the budget when people already don't have money. And it's not going to work. And the federal budget deficit is going to rise by $50 million over the next 3 years. Next slide. And so how is Hoover repaid for his kind of services? Well, not very well, right? He's going to be the ire or the blame of many of the conditions that are afflicting Americans during these earliest years, and some of the worst years, really, of the Great Depression. Many are going to say that philosophy of rugged individualism, of the hesitancy to use federal aid, action against the Depression, are going to actually accelerate it. That he didn't quite grasp what everyday average Americans were experiencing. Himself was a very wealthy individual, a millionaire by his own right. They believed that he didn't understand from his kind of ivory tower in Washington that the hunger and desperation afflicting the working class of the United States. He also, and a lot of Americans argued, that all of those policies that I just mentioned, right, home relief, foreclosure relief, state and local funding, was to benefit the wealthiest Americans. That it was all designed for those top 5% of earners to get their share back with nothing really left for the rest. And so they're going to respond by naming a lot of things after Hoover. Hoovertown's probably being the most, kind of rememberable. This Hoovertown from East Toledo on the banks of the Maumee River is one such instance of those. They're really shanty towns constructed out of cardboard or loose materials, homeless encampments for the city's unemployed. But a few of my favorites that I don't think are as well known are Hoover blankets. If you're using newspapers to keep warm, that's a Hoover blanket. If you have a Hoover flag, you pop your pockets inside out, and that's a sign that you're penniless. That's a Hoover flag. And of course, my favorite, the Hoover wagons, which are vehicles that had their engines removed and then were pulled by horses because they couldn't afford the gasoline. That's a Hoover wagon. With some very great photos of these. But Hoover is really going to be remembered for his kind of ineffective leadership and the associations with Hoover towns, Hoover blankets, Hoover wagons. But what is going to be the most important and kind of the final nail in his aspirations to win the election in 1932 are going to be his response to the bonus army that we'll talk about next. So next slide. So what is the bonus army? And actually, I asked my students this, so I want to do the same thing. How many of you here actually have ever heard about the bonus army in the United States? There's just a few of you. Okay, this will be new for many of you, which is good and what I intended. So what is the bonus army, right, for those of us who don't know? Well, it's a protest of about 17,000 to 43,000 World War I veterans, their families, and the supporters who plan to march on Washington, D.C., to demand Congress to enact an early bonus payment. And what these bonus payments were it was a plan of deferred compensation for World War I veterans that was not going to be paid out until 1945. It was a payment for your service. Most of those payments were around $1,000. They gave you up to $500 for stateside service and up to $670 for overseas service. And essentially it was a thank you by the federal government for your service in World War I and defending democracy. In 1924, Calvin Coolidge is vetoing a payment. He actually vetoes the entire bill, but it does pass through Congress, and it begins to be known as the Tombstone Bill, which essentially World War veterans are arguing that I'll be dead before I get the payment in 1945, so why does it matter anyway? Coolidge was worried that this kind of $1.5 to $2 billion injection to World War I veterans was going to upset his kind of economy that he had created. But by 1932, when conditions get really bad in the United States because of the Great Depression, you're going to experience, like I said, upwards of 25% unemployment. Many of these individuals are World War I veterans, and they're going to kind of, through a grassroots effort, start demanding that Congress pay them that bonus payment now. That I'm not waiting until 1945. I want it in 1932, and I want it now. And so this is a picture for some of those. They came from all across the United States, every corner, every state in the lower 48. There could be some from, other places. But in the United States, the leader, Walter E. Walters from Portland, Oregon, he was a sergeant in the First World War, is going to kind of rally these troops. And they're going to march on Washington to demand these payments. So next. And of course, they get to Washington, and immediately they're seen as a nuisance by congressmen, the president, and residents of Washington, D.C. And they set up their encampment in the city, and they're going to, through protest and direct action and speeches, demand that Congress pay them this lump sum. And so in early June 1932, the House of Representatives is in fact going to vote to give them this payment now. That they understand that the conditions are bad, that they fought in the trenches of Belgium for this payment, and that we should pay them. Unfortunately, the Senate on June 17th says no. we're not going to pay them. And in fact, with the support of the president, are going to say that at this time, we cannot inject that $2 billion into the American economy. It's going to accelerate the depression that we're already in. And of course, they're also going to claim that there's communist infiltration among the veterans' ranks, that some of the leaders are Bolsheviks and communists, and therefore we cannot turn this money over to them. But as a token of their appreciation for dying in the fields at places like Flanders Fields, they're going to allot $100,000 to send them all home. And they say, we'll buy you your train ticket, go back to where you come from, don't stay in Washington, D.C. Many of the congressmen and senators and House of Representatives actually flee through underground tunnels and out back doors so they don't have to interact with the crowd. Many of them thought they would be lynched or killed for their kind of votes. And so the BEF, the Bonus Expeditionary Force, as they came to be known amongst themselves, refuses to leave Washington, D.C. After the allotment of $100,000. They say, we are not leaving Washington, D.C. Until we get that payment. And what we'll show next, I have a great clip from a PBS documentary. What you're going to see is that under the order of the President Herbert Hoover, he's going to enact the United States Army under Douglas MacArthur to go into Washington, D.C. and forcibly drive the veterans back home. That if they're not going to leave willingly, we'll do it, unfortunately, at gunpoint. So, next slide.
To avoid confrontations, the situation had come to a head. The President ordered the evacuation of the veterans from downtown Washington. By police count, there were still 11,698 marchers and their families in Washington. Midway between the White House and the Capitol stood a row of half-demolished buildings where hundreds of marchers were living. On the morning of July 28th, the wheels were in motion to evict them. Waters urged his men to cooperate. Then someone began to throw bricks at the police.
Glassford and several police officers run to the area. 2 cops are grabbed. 1 cop pulls out a gun and he fires. Another cop turns and he fires a shot.
1 veteran was dead and another lay dying.
Now there's been bloodshed. Now you bring in the troops.
When MacArthur moved his troops to the affected area, he knew exactly what he was going to do. And he adorned himself in his dress uniform along with his major aide, Dwight D. Eisenhower.
The force stepped off at 4:30 p.m. More than 200 cavalrymen spread out across Constitution and Pennsylvania avenues. Behind them came 400 infantrymen, followed up by tanks and armored vehicles.
I was about 7 years old at the time, and the troops were out on Pennsylvania Avenue. I was scared, and my dad kept saying, nothing's going to happen.
The cavalrymen, one of them is Major Patton, have got their sabers out.
The soldiers donned gas masks and without warning began hurling gas grenades at the veterans. The troops advanced, some jabbing with bayonets.
Tear gas was just burning my face. I was trailing behind my dad. He kept hollering, come on, boy, come on, boy.
Marchers were choking from the gas, just like the battlefields in France.
And so they're being forced out of their shacks by smoke bombs and tear gas, hurled by the troops who have been called out by the President of the United States.
Chief Glassford stood by helplessly.
The veterans did not believe the country for which they had fought would ignore the plight into which the Depression had placed them. Many did not believe that United States troops would take the field against them.
By early evening, most of the marchers had been driven across a drawbridge that led to their main camp.
The president does not want MacArthur to cross the bridge, and MacArthur disregards the order. Eisenhower later says that he saw this happen. MacArthur says, I cannot bother with pieces of paper during a military operation. And so he crosses the bridge.
All through the camp were scenes of panic.
My dad says, let's get the hell out of here. The soldiers are going to kill us.
Then troops began to set fire to their wooden shacks. One reporter wrote, "The blaze was so big it lit the whole sky. A nightmare come to life." The president looked out a window of the White House in the direction of the fire, then retired for the night.
And the roaring flames sound the death knell to the fantastic bonus army that ends so disastrously in the shadow of the capital of the United States of America.
So that is the unfortunate end to the bonus army. And what importantly is going to be that final strike against Hoover. As reports of what happened to the bonus army spread across the United States. No, you're all right. No, you're good. As reports of this kind of spread across the United States, any support, really major support that Herbert Hoover has to win in 1932. He's up for election at the end of this year. Are going to dwindle almost overnight. This is going to be remembered really not only as a stain on Hoover's reputation, but the American military will eventually say one of the darkest days in their history as well. Though it's not all doom and gloom, in 1936, the veterans of the First World War did get their bonus payment. Congress takes up the issue again in the summer session of 1936. FDR is going to veto it like his predecessors because he's worried about that injection, but both houses of Congress are going to override his veto and deliver that $2 billion in payments to World War I veterans 9 years, again, before it was set to be slated. Right? And so that's where we leave off in the United States in 1932. Next month, when we start, we'll talk about the election that follows this event of the bonus army, when FDR, this kind of new, hip for the day, politician out of New York, is going to challenge kind of this Republican ascendancy. But it's important as we end off this lecture in the last couple minutes that we have, that we talk about 1932 or the early 30s is also, what will foreshadow the end of this lecture series, a very important marking in international affairs. And that being that fall of the stock market exchange in 1929 and the ensuing kind of international debt crisis. We talked about that triangular circle of payment. This is going to have very adverse effects on countries around the world. The first being the Empire of Japan. All right, entangled in that world economic kind of system, the stock market crash in the early 1930, 1931 are going to decimate their economy. There's going to be a reduction in production in Japan of about 50%, half. There's going to be widespread starvation among their rural populations because silk farming and silk production is going to decline so rapidly. And they're also going to start running out of raw materials and resources. And so a kind of radical bunch of military generals in the Japanese Imperial Army are going to do an unauthorized invasion into mainland China in a place called Manchuria without the support of Emperor Hirohito, who's pictured here. He'll later come to support this. One of the main reasons that Japan is going to invade mainland China, and why does any of this matter? Well, many people are going to say that 1931 is the start of World War II, that when Japan, with this massive kind of need for resources and materials, invades China through militarism, that's going to spark off the very beginnings of the Second World War. They do this because the economic condition, accelerated by the collapse of the American economy, pushes them for a need for raw materials and resources. The most radical amongst the Japanese leaders are going to say that we must invade China. It's kind of a long-held imperial ambition. Everybody from the United States to the Dutch has wanted into China. It's this land of resources and opportunities. What that's going to lead to is the occupation of Japan, or of Manchuria by the Japanese, is going to lead to a brutal, brutal occupation that's going to last until the end of World War II and lead to things like the rape of Nanking, the murder of 10 million people, enslavement of Koreans and those in China, and going to make an ally out of the Chinese with the United States when it comes to fighting World War II. Also, when the Japanese invade Manchuria, they start getting these access to natural resources, which they don't have on mainland Japan. It's going to very importantly put them in contention with the United States for kind of supremacy over Asia. And because of that stock market collapse, because of that use for raw materials, they're going to creep through Asia, and eventually in 1941 going to attack Pearl Harbor to pull what they think is going to keep the United States out of World War II, but inadvertently brings the United States into World War II. Again, this all is interconnected. I said at one of the first kind of lecture series that history does not occur in a vacuum, that we in the United States like to think of the Great Depression as this isolated event in which it only affected Americans. No, it's not true. It affected the entire world, some places less than others, but importantly, as we'll see on the next slide as well, it's going to affect a country in Europe, Germany, and going to lead to a rise of Adolf Hitler. Right? Germany, under similar conditions, after those they default on those loans, the Allies can't pay, they can't pay the debt, the Allies can't pay the debt back to the United States, is going to experience a massive kind of economic downturn. The Weimar Republic is going to be in total turmoil. The Deutschmark, right? $1 US is going to be worth 4 million German Deutschmarks, right? That's hyperinflation to a massive proportion. So bad that a wheelbarrow full of Deutschmarks can buy a loaf of bread. And other times, Germans are burning the actual money to stay warm in their homes because there is no money in Germany, right? Massive unemployment, higher than the United States, 30%. And Germans are going to look for radical solutions to radical problems. In the election of 1932, a familiar party called the Nazi Party, the National Socialists of Germany, are going to get 37% of the national vote in the parliamentary elections. And on their left, the Communist Party is going to get 15%. And those two are going to battle. And this, kind of illustrates this post. Most of you probably don't speak German, neither do I. I looked up the translation. Hitler, our last hope, right? They're arguing that people like Adolf Hitler, of course, hindsight 2020, is going to kind of remedy these situations, again, caused by the collapse of the New York Stock Exchange in 1929, caused by those exacerbating factors of the Great Depression. And why this matters is that the United States is going to fight poverty on the home front, but the only thing that's going to pull us out of the Great Depression is when we finally enter a war with the Empire of Japan in Nazi Germany and Europe, right? That is what's going to end the Great Depression. So I wanted to plant that in your head that as we, next couple months, we talk about all of the stuff in the United States, which is important, the Dust Bowl, for instance, sports, culinary, kind of cuisine during the Great Depression, the end of the Great Depression. All of this is looming in the background. And we'll talk about it towards the very end. Some of this is going to come to roost on the home front as well. And increasingly, by the end of the Great Depression, FDR is going to understand that this was all happening in the background and that something much larger is looming in the future. So we go to the next slide. So this is important, this very early period of Herbert Hoover, right? These are some of the worst years of the Great Depression. Through 1933, 1944 is when the United States is going to experience this kind of massive influx of unemployment, of kind of limited cash revenue, of mass poverty and starvation among the American citizens. What we'll talk about next month is that election in 1932, the head-off between Herbert Hoover and FDR, and then kind of the ensuing decisions of the FDR administration to try to alleviate or mitigate the damage that's caused by, he'll blame Hoover and the Republicans, but really this international monetary system. But I can't leave you without doing a little defense for Herbert Hoover. He was bad in many regards, right? But there has been a renewed interest in the Herbert Hoover presidency in the last few years, and historians have started to argue that Herbert Hoover was bad, he was an ineffective leader, but what he did do at the very end with all of those legislative agendas that I talked about, right? Preventing home foreclosures, injections of state funds, public work programs. If you know anything about the Great Depression, that's all going to sound familiar, the WPA, Work Progress Administration. Herbert Hoover at the very tail end, right, and it still confuses us today. Why didn't he do more? He is going to, for the first time, really, after his two predecessors, establish in the American mind that the government can do something. They're going to argue that Hoover didn't do enough, but FDR is going to build upon that in 32 and say, where the Republicans failed you with public infrastructure projects, with injections of cash, the Democrats, under me, will do better, right? And so there's been this kind of renewed interest in looking at Herbert Hoover and seeing what actually his legacy is beyond the Hoover towns, beyond the bonus army, to see what his kind of influence was on the Great Depression writ large, the longer duration of it. All right, well, here is some further reading if any of you are interested. There's a great book on the bonus army, also a great documentary by PBS, as well as some others. That's 2016 book kind of talks about what I just talked about, the Herbert Hoover. So I thank you all for coming. I'll take any questions here in our last couple minutes, and hope to see you next month. So thank you.